Ever get that feeling you're piecing together a puzzle, but like half the pieces are missing? That's the market sometimes, right? But what if I told you there's this like sneak peek we can get, a way to see what the big players are thinking even before they make a move?
Oh, I like where this is going. You're talking about getting inside their heads.
Exactly. And that's what this week's deep dive is all about. We're diving into the world of commitments of traders data, COT data for those in the know. Think of it like getting backstage at a concert. But the concert is the gold market, XAUUSD specifically, and the date is September 10th, 2024.
And I'm guessing this backstage pass comes with some juicy insights.
You bet. The report paints a bit of a mixed picture, actually. There are hints of a bullish gold market, but also some caution flags popping up. So our mission, should we choose to accept it, is to decode those signals and figure out who's sending them.
Sounds like a challenge I can get behind. You know me, always up for a good market mystery.
Love it. And luckily, this report makes it easier by breaking it down by different types of traders. It's like, imagine a basketball team.
Okay, I'm with you.
You've got your point guards, all about those quick plays.
Right.
And then you've got your seasoned centers focused on the long game strategy.
Love the analogy. So who are the point guards of the gold market?
That would be our non-commercial traders. Often these are hedge funds, speculators, folks looking to make a quick return.
Right, the ones who can really make waves. They're not afraid to take risks, which brings both big rewards and that element of, shall we say, excitement to the market.
Exactly. And this report dives into their playbook, specifically their positions on both gold and the US dollar index. Now get this, they've increased their net long positions on gold. Bullish signal, right? But here's where it gets interesting. They also significantly increased their short positions.
Hold on, so they're bullish and bearish at the same time. That's a head scratcher.
Tell me about it. It's like they're playing both sides.
What's the thinking there? Are they unsure about something?
That's the million-dollar question. One interpretation is that maybe some of these non-commercial guys are getting a little nervous. Gold has been climbing pretty steadily, and they might be thinking, okay, time to hedge our bets just in case this rally runs out of steam. So they dip their toes into short positions just as a precaution.
It makes sense. Got to manage that risk, especially when you're playing fast and loose. So that's gold. What about the other half of the equation? XAUUSD is all about gold against the dollar, right?
Absolutely. Can't forget about the greenback. And according to the report, these non-commercial traders, they've actually decreased their net long positions on the US dollar index.
So less optimistic about the dollar, which, if you connect the dots, could actually be another point for XAUUSD.
Precisely. It's like they're betting on gold to outperform the dollar. So we've got our fast-moving, potentially trend-setting, but maybe a tad uncertain non-commercial traders leaning towards a bullish XAUUSD. But before we jump to any conclusions, we've got to check in with the other half of our market team, those strategic commercial traders. They're the ones playing the long game.
Right, those commercial traders, they're practically the veterans, you know? The ones who've seen it all.
Exactly. Less concerned with those flashy plays and more about that long-term stability. So, how are these market veterans approaching gold right now?
Well, get this. The report says they've decreased their net short positions on gold.
Decreased shorts. Okay, remind me again. What does that tell us about how they're feeling about gold?
So remember, shorting means betting on the price to go down, right? So cutting back on those short positions means they're feeling less bearish on gold. Not exactly building a golden statue just yet, but definitely seeing less risk compared to, say, a few months ago.
Got it. So not hitting the panic button, but not quite ready to crown gold the king either. What about their stance on the US dollar? Are they on the same page as the non-commercial guys there?
Here's where things get even more interesting. They've actually increased their net short positions on the US dollar index.
Oh, hold up. So they're aligning with those fast-moving non-commercials on the dollar.
Seems like it. Both groups are a bit wary of the greenback right now.
Okay, now my head's spinning a bit. We've got the big players hesitant on gold, but also not too fond of the US dollar. It's like trying to pick a winning team when they both seem a little shaky. What does this difference of opinion mean for XAUUSD, especially since it's got that double exposure to gold and the dollar?
Well, that's the million-dollar question, right? And this is where the report gets really interesting in its final bias assessment. Basically, it highlights these mixed signals we've been talking about, like a real clash of the titans, you know?
Right. Almost like those sports movies, where you've got the rookies itching to go for it, and the veterans preaching patience. So what's a gold market observer to do with all these conflicting signals?
Honestly, it's all about understanding the why behind those positions. And the report does give us some clues. It points to some pretty big economic factors that are probably feeding into this whole tug of war. Inflation, for example, it's still a thing. And there are always those whispers about potential interest rate hikes, right?
Right.
And when those anxieties are swirling around, gold tends to look pretty good. You know, that whole safe haven appeal.
Exactly. Makes sense that those non-commercial traders, always looking for the quick win, they see an opportunity. But then you've got the more cautious players, right?
Right, the commercial guys. And they're probably taking that longer view like we talked about. Fleeting trends. Not really their game. They're thinking about managing risk over the long haul. So maybe their hesitancy on gold, it just means they're recognizing that while things look good now, the bigger economic picture is still kind of up in the air.
It's like they're reading different chapters of the same book, maybe. So for our listener, trying to connect all these dots, what are the key takeaways here? What do we really need to remember from all of this?
Okay, so bottom line. The COT data right now, at least it suggests XAUUSD is leaning bullish, short term anyway. And that's largely because of those speculative bets on gold we talked about, those non-commercial traders, remember? And this is a big but, anyone thinking of making a move needs to be ready for some volatility. Those mixed signals, they could make for a pretty bumpy ride.
Okay, so buckle up, gold investors. It's going to be interesting. Any final words of wisdom from the expert before we let everyone get back to their gold watching?
Just remember, this COT report, insightful as it is, it's just a snapshot, a moment in time. And the market, well, it never sits still. It's always changing, always evolving. So staying informed, staying flexible, that's key.
Absolutely. Couldn't have said it better myself. The markets, they're kind of like that puzzle we were talking about earlier. Always shifting, always challenging us to find those missing pieces. And on that note, we'll leave you with this. We've talked about how the big players are positioning themselves, but what about you? If you had skin in the game, which side would you choose? The bullish excitement or that more cautious approach? Something to think about. Until next time, keep asking the right questions and happy investing.